Well, over the years, one thing which I have come to realize is that if you really want to understand what's happening in the Indian stock market, one person you should talk to is Ramesh Damani, which is why it's wonderful to be with you here in Mumbai, the business heart of India. Come, Ramesh.
And at Nariman Point, the business heart. But thank you so much for your kind words, Vikram. It's very kind of you to say
No,
that.
it's always. You always know exactly what's happening.
I wish.
So you're going to tell us down to a percentage point as to where the Sensex is going to be next Monday or
exactly,
next week.
And never come on your show again.
Okay, so it's always very difficult to predict, week by week. Short-term fluctuations are there, no one can predict them.
Yeah.
But I want to just start by getting from you the broad directional sense, because something which I've always heard from you, which has always been very good advice, is don't worry about the day-to-day fluctuations. Keep your eye on the big picture. So what's the big picture on the Indian stock market?
The big picture, the first big takeaway for your viewers, Vikram, is that the bull market that began a few years ago is well and truly underway now. And bull markets typically run for a period of time, and so will this run. So the next question that I'm always asked is, what is propelling the bull market? Now, every bull market tells a story of its own. The 92 bull market spoke of India's liberalization, the 2000 of India's technology superpower. So what is this bull market telling you? This bull market is driven by two forces, the two Ds I call them. One, of course, is demographics, and the other, of course, is digitization. And those two currents are propelling these bull markets further. And if you want, we'll take up each of these separately to try and understand how they're propelling this forward.
You said a bull market which began a few years back. When do you think it actually began? Because you could say it began after the crash that we saw in 2020. You could also say that 2020 was an abnormal event caused by COVID. So the bull market actually began earlier. That movement from 38,000 to 60 for the Sensex.
I think it began the day the finance minister, Mrs. Sitharaman, argued that Indian corporate tax should have gone to 25%. If you remember, the index was up a few thousand points at that particular day. I think it was in 2019 or so. And while COVID tested that bottom, it didn't break at the bottom. It rebounded very quickly. And I think the reasons that bull markets are not very visible when the bull markets start, but as the bull market progresses, they become more and more obvious and plain as the horizon here is that there is a bull market and there's some economic reasons propelling this bull market ahead.
But at 60,000, the level is not, or the Sensex is not radically different to what it was in the last 2-3 years. So it's not that there's been a substantially big jump.
Well,
it's been flattish.
I disagree. In the last bit, and the COVID lows, which is about 3 years back, index was
30,000. You could say was an abnormal low, right?
But that's the buying opportunity people get.
Yeah.
60,000 has been fairly new territory for the index, which is reached only in the post-COVID, in the COVID period, if you will. And indexes never give you linear returns, Vikram. They zig and zag, and they go ahead, and they test your patience and they reward your conviction. So if you want to remain invested in India, let's take an example. I came back and started my business in 1989. The index was 600 at that time. So from 89 to 2023, any bad thing that you can think has happened to India. We've had the global financial crisis, we've had governments change, we have the communists come into power, we had plagues in Surat, we had Kargil, and yet the index is up to 60,000. That speaks to the remarkable resilience of the Indian economy and also the power of remaining invested. So as a lot of wise people have said in the stock market, it is not timing the market that is as important as time spent in the market. And I think the next 10, 20 years will be more of the same. The time spent will be more important than timing the market.
Okay, so that's the big picture, right? Get into the market and stay invested in it. And if you stay invested for a long enough period, you will make good returns.
Right.
And that's the big story of how you make wealth. You get into it and you stay in it for a long period of time. Keep your eye, 5 years out, 6 years out, 10 years out, that's what you should do?
We're now extending the time frame to 10 years, 20 years horizon because I'm investing for my grandchildren, Vikram. I'm sure you'll appreciate that. I'm looking from their college point of view. But that's not the point. The point is when I came and started my business, the index was about 6,800, the Sensex, 6,800, it's hard to believe it was in triple digits, all right? It's closer to 60,000. And if you look back at the last 30 years, a lot of things have happened in India which are not very bullish. We had the global financial crisis, we had governments go, we've had Kargil, we've had, n number of bull markets end in India. And yet you see, over time, the markets plot ahead. So my feeling is the Sensex, depending on the two time frames you take, the lows and the highs, compounds at a rate of between 14 and 16% a year. That is without dividends. No reason to believe the next 5-10 years will be worse than that.
So 14 to 16%, let's just try and understand that number. People are the power of compounding. If you think 14 to 16%, you're pretty much looking at the Sensex, what, doubling within 5 years? or 6
Doubling
years?
every 5 years, yes.
Doubling every 5 years, so it's 60,000 right now. By that logic, it will be 1,20,000 in 5-6 years.
It'll be a six-figure plan that you can come back and interview me
2,40,000
in 12 years'
12
time.
years from now.
Yeah, it should be there. I mean, that's the inherent growth rate. And in fact, I believe that we're at such a sweet spot right now that maybe we'll do better than 16%, maybe a couple of percentage points
16%
better.
of course is at nominal rates, right? So there's inflation of 5-6%, but you're
Yeah.
still getting 9-10% real.
It's
rate
the
of
best
return.
asset class you have.
You said there were two factors driving it. Demographics. Let's discuss that
Yeah.
first, and then I'll come to digitization.
Let's discuss demographics. India and China both have a similar population now, 1.4 billion people. Over the next 30-40 years, India will become 1.7, 1.75 billion people, and China will decrease by that amount. And in the stock market, we have a strong saying that demographics is destiny. And what that means essentially is that the average age of an Indian right now is about 29, 30 years, which means that he was just born post-liberalization of 91-92. And that's extraordinary. We were all products of a generation born in socialism, born in the 60s, born in the 50s in India, right? This is a generation that is now speaking English, is connected to the net. 95% of the people have smartphones with them, are globally connected, don't belong to socialist Raj, and they belong to the aspirational class of India. And that demographics of India being 1.7 billion people is going to drive enormous change in India. In fact, some economists said that this generation of India, the generation of India born after the 1990s, is probably going to be the biggest source of consume and the biggest source of labor in the knowledge and network economy. And now if you look around you, you can see how people use the smartphones, how businesses are created using the smartphones, how UPI, Aadhaar are all
And that's the second thing you were talking about, right? Digitization, that you've got demographics, but
Right.
it's connected to a digital ecosystem and a digital backbone and an India stack that is probably one of the most advanced in the world. So for the first time, normally you say Indians struggle to do well in a time when infrastructure and everything is bad for them.
Right.
But here, the digital infrastructure actually that India is running off
Is world-class.
probably better than anywhere else in the world.
Yeah, it's a great point because in our generation, one of the highlights was when Neil Armstrong walked the moon. And if you remember, Vikram, when he walked on the moon, he said, it's a small step for man, but a great leap for mankind. And India's digitization is India's moonshot. And there are two pillars to it. There's a domestic component to it and an international component to it. The domestic component, of course, is, as you mentioned, we all have the Aadhaar card, we all have smartphones, we all have UPI, and we all linked together. And India did, I think, last year, 8 billion transactions worth over 200 billion. That's almost 4x what US, Britain, Japan, France did combined basis. Yeah. So the digital infrastructure is now dwarfing the physical infrastructure. And we're using Paytm and UPIs and to transact for little as a cup of tea for $50. And it's frictionless and it's zero cost. Just imagine the possibilities of businesses expanding because of that. The amount of money going directly due to Jan Dhan schemes that employees have. So that is one part of the digitization debate. The second part is what COVID brought to the front, is that increasingly the world is relying on India's digital technologies in order to improve and enhance their own societies. And rather than coming in pure tech and service, which is probably a bit challenged right now, it is coming in knowledge-based processes. For example, law work, medical work, high-end legal work. All that is now coming to India because the cost of communication is cheap, the cost of office is cheap in India. Yeah. And those specialized BPO or KPO firms will have secular growth paths ahead of them, almost manifest in many, many professions.
Till AI changes all of that, but that's a separate question.
That well may, but I think we'll still create some additional jobs for that.
Okay, so when it comes to the point of view, where do you invest in all of this? Which are the sectors you're looking at? You, for example, I see are still invested in some, there's also physical infrastructure being built, and many people would say that that's the place to be. In defense, I see you've got positions in a lot of defense companies, which is again another area. These are not either of those trends, but this is another thing which is happening, which is the building of some amount of physical capabilities as well.
The key in the stock market is you got to invest at the right price, buy it cheap. So the physical, the defense and the railways. See, the government of India is leading the capex drive. And the sharp edge, the blunt edge of the capex drive is they're expressing it through the railways and through the defense companies. That's how the government does it, through road building, right? So these companies were listed and they were a very attractive price. So it didn't matter whether it was physical or virtual infrastructure, they were just cheap. So we bought those. But to give you an idea of something more forward-looking that we're thinking of, a lot of governments, including India, set a very strong ambition of carbon-free, zero carbon by 2050, 2040, things like that. The opposite of fossil fuels is, of course, electricity. So there'll be a huge surge in electricity out there. And two things that would stand out are copper, which is almost like a required material or metal for electrification. And of course, the infrastructure build out. Who builds the transformers, the gears, the connectors to all this. So one other theme, other than what you could look at in terms of the physical defense and railway infrastructure, would be, for example, electrification. And there are a number of ways that you want to play that theme. And I think it will become very prominent. I mean, India has very limited amount of capacity in copper. There are only a few companies doing that. And so the good way to express yourself is to buy perhaps those companies.
And the demographic theme, because they're done, should we sit down for a minute?
Sure.
It's nice here, yeah. So the infrastructure theme, the demographic theme would be what, FMCGs?
Yeah, I mean, demographic themes plays out in different ways. It plays out in more housing, more savings, more banking, more education, more travel. So generally the consumer economy will tend to do well. These, of course, have been slightly slow growth places in the last few years. But I think as, I was from your hometown, Delhi, a few weeks ago, and we met some very interesting companies that are trying to reach to the last mile of Indian villages, the one that everyone ignored and could not be connected. They're using innovative digital apps. So my feeling is that that part of the app economy will also do well.
Now let's look at the bear case. What could go wrong? Social unrest, is that what could go wrong? Political instability, Indians fighting with Indians,
I think
people getting shot on television.
I mean, social unrest is actually more likely to happen into our great Asian rival, China, because, well, everything seems calm on the surface out there. Sometimes it's a cauldron underneath it. While India, everything seems disorganized and disoriented in the surface, underneath the country moves on. And I think the country will move on. It has a democracy. People vote, people elect the government, and people accept the government. I mean, you had, I think, 600 million people vote in the last election. 90 million of them were first-time women voters. These are the aspirational class. And that is going to make a strong statement that good politics makes for good economics also.
All right, so last word, if you have to tell anybody what they should do with their money and where they should be investing it, by the way,
well,
in the sector.
My first hypothesis, which I've always been saying, is remain invested. That's the first thing you need to do. I think we are at the right place at the right time in history, and I think this generation of India, born after 1991, has a chance to go down as what we call the proverbial greatest generation, because the economic opportunity, we are becoming the center of the universe in a manner of speaking because of our demographics, and because of our digitization, we first time have the skill sets to compete with the best in the world. So my great advice is remain invested, buy great quality companies, and hopefully you'll see me back when the index crosses 6 figures.
We'll be back talking to you, well, long before 6 figures. We're not going to let you get away that easily, Ramesh. We'll keep coming back with you to touch base on how things are going. And therefore use every dip as a chance to buy. Would that be also yours?
Definitely don't use every tip as a buy to buy. Find great businesses which have great cash flows and remain invested in the business with a conviction. As Warren Buffett taught us, that a stock is not a price that moves up and down. If you made 20 bucks, it's not necessarily a good stock. But you buy a piece of the business and spend some time doing it. And if you can't do it, if you cannot, for example, buy individual stocks, you don't have the time, don't have the inclination, buy an index fund and you'll ride the prosperity along with the Sensex.
All right, so there you've got it. That's how you can take advantage of this India story that we've been talking about at great length. You can actually take part in it. You just buy good companies and ride them for a long period of time. Thank you so much, Ramesh. Always a pleasure.
Thank you, Vikram. Always a pleasure.
Thank you.